Future trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to Forecast Update Live, a video series from Ever.Ag Insights, where each month we gather to discuss our latest dairy market forecast. I'm your host today, Plourd. John is on the road, and so's Matt. So we're shaking things up a little bit this month. As always, we are joined by Erica Maedke, but special guest today, Kathleen Wolfley. Hi, Kathleen.
Hello.
To get us started, Erica, please run us through the highlights of this month's forecast compared to last month.
Hi, Phil. I'm excited to be back again. It's been a bit of a big shakeup. Clearly, we've all watched the markets come down over the last 2 months. Our forecast is doing the same. As we look at the rest of 2025, for butter in particular, the biggest number is a negative, almost 50 cents for Q3 and Q4. Also taking the rest of 2026 down almost 30 cents. Non-fat also slipping roughly a dime, cheese down a dime in the near term, and also a little bit of a haircut to 2026. Our whey forecast is up a little bit, just looking at the strength in that complex continuing on. Go get your protein latte from Starbucks, and we'll see that keep going. Thanks, Phil.
Yeah, I'm pretty sure no one had 160-something butter on the bingo card for September of 2025. And so you adjust accordingly and try to figure things out. And that's a good segue, Erica. Ordinarily we have a guest on. We should give them the easier argument to make.
We should.
Yeah, Kathleen's really good. So we're going to give her the bullish argument, but we're going to start with you today. And what's the bearish argument?
The bearish argument really starts with supply. And I had to write all these numbers down because it is amazing the amount of milk that is coming from various sectors around the world. All of these are August year-over-year numbers. United States up 3.2, New Zealand up 2.5. You move over to the continent in Europe, Germany, the largest, up 2.1, France 4.3. Now, my rule of thumb is usually something in the +1 category is enough to keep up with demand. The fact that we are floating +2, 3, 4% year over year, really strong milk supplies. They've got to go somewhere.
You forgot the Netherlands at +4.8.
+4.8 at the Netherlands and Poland +4.6. I mean, just right down the line, really strong. And it's true, money makes milk. Producers on the farms have seen really good pay prices. European pay prices are still very strong. Fonterra had come out with a good, strong pay price to start their season. We're getting what we pay for. And here's the milk. Here in the United States, we have capacity to process it. So it's not necessarily sitting long on the milk side. We are moving it into commodities. We're making saleable product in a lot of that new capacity. It is hitting the marketplace. And really, the market has to do its job now. We have the supply, and we've got to go find a price that can create the demand to move this product. And I'm a little concerned about demand. If you look at food service, that's been slow. If you look at cheese, domestic consumption, that's been on a pretty negative trend for a year. So we've got to get to prices that really will stir up some additional demand. We have not yet seen that happen at the retail shelf. We need some more promotional dollars to get people eating dairy products.
Kathleen, what do you got for the bullish side of the story?
Everybody is so bearish. There, I'm done. That's it.
That makes me nervous.
Yeah, I mean, historically, when everybody gets on one side of the boat, there's always an opportunity for it to tip, right? And I think that's, to me, one of the bullish factors today. You talk to people in the US, they're bearish. You talk to people in Europe, they're bearish. You talk to people in Oceania, they're bearish. The China situation certainly isn't providing many bullish comments either. So I think the fact that everyone is on one side of the boat is one bullish flag that's out there. But I'm going to stick with production and low prices cure low prices as my two key themes for the bullish side of the argument. On the production side, to Erica's point, we have a lot of milk. But with milk prices coming down pretty substantially here over the last several weeks, at least from a futures perspective, tight margins are heading toward the producers. They may not see it in the milk checks today, but in the next several months, we should start to see a little bit of belt tightening or potential belt tightening from the producer level. One easy way to generate cash, cull cows. Beef prices are near record high levels. Those cull cows are worth a lot of money. We had the highest herd levels going back to 1993. There's a huge opportunity out there to suddenly see a big reduction in cow numbers. So from a supply perspective, at least in the US, I think fewer cows could be coming. At the same time, production caps are another thing to watch. There's been some concrete talk around production caps, particularly in the West, both on the volume basis and component basis as well. Hearing some commentary in the upper Midwest along those lines as well. If we start to see milk buyers put on production caps, I think there's potential producers could respond, especially in a tight margin environment where every penny counts. So I think from a U.S. production perspective, there's risk that we could start to see a bit of a pullback, and that could leave us with less milk available in the U.S. market.
One last little detail, Kathleen, I'll help you out here.
Thanks. Appreciate it.
We were chatting before today about monthly averages and how might that play into things in October specifically.
Yeah, I think low prices tend to cure low prices. It's October 1st. If you're let's say a cheese buyer that buys on a prior month average, the average for September was $1.67 for blocks. The average for August was $1.81. There's real savings on the table if you have the ability to load the boat a little bit heavier going into the holiday season here in October based on those lower September prices. So I think to your point, Phil, there's prices cure low prices type opportunities here in the marketplace, not only from just buyers maybe buying a little bit more than they typically would in a month to month, just given the lower prices, or if you're a retailer and you have the opportunity to buy $1.75 butter compared to $3 butter a year ago, it seems to me like that we could see a ratchet up of promotional activity, and that could help to move a bit more fat, potentially more cheese through grocers over the course of the next several months. Food service operators may take a similar tactic as well.
All right, it's favorite look time. I bring the favorite look. This month, kind of thematically, we're talking about a lot of fat. Our favorite look this month is massive growth in global fat output. This is something that VUCO in our Melbourne office helped put together. And when you look at this year, we are going to see nearly 600 million more pounds of fat coming off the farm between the US, Europe, and New Zealand. 272,000 metric tons of growth, a huge jump. For next year, our model shows another 188 million pounds or 85,000 metric tons of growth combined. That's up 1%. And so that's growth on top of growth on top of growth. Where's all the butterfat going to go? So this is a really impressive look at, if you just want to say, hey, feels like there's a lot of fat in the world today, this certainly is a dramatic look at that. Kathleen, thanks so much for joining us today. If you want to hear Kathleen, we had a great episode of Parlor to Plate this week. Erica led the discussion, Kathleen, some others. Great discussion of these bearish factors in a little bit more detail. Kathleen is also the host of our new hit show, Chart Chatter, where she and VUCO get together every week to peek through some charts. So if you want to see more Kathleen Wolfley, look at YouTube, look at Parlor to Plate. That will do it for this month's episode of Forecast Update Live. Thank you to all of our panelists. Thank you to everyone on the Ever.Ag Insights team for their work on the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out to us via email at insights@ever.ag. And if you like this video, be sure to subscribe to our YouTube channel, give us a thumbs up, and share with a friend. We'll see you next month for another edition of Forecast Update Live.